Today I want to take a closer look at 3 reasons to be bearish on Nvidia after the company reported earnings. Unfortunately, earnings weren't the best and there are some bearish points to kind of keep in mind of. And some of you might be confused, as a few hours ago I released a video explaining 3 reasons why I'm still bullish in the company. And no, it's not that my opinion has changed in the past few hours. I just think as an investor it's important to understand both the bearish and the bullish points of a company. So even though I am still a long-term bull and I have no intentions of selling any of my shares, I still want to kind of share my overall bearish thoughts to understand the risk that can still affect this company. So let's get started.
I do want to thank the Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
Alright, so first let's start off with price point action, and we can see the stock right now is actually up 2%, and this is a complete shift from earlier this morning where the stock actually opened up about 3% down. So my first kind of bearish point is going to be the market is already expecting this to kind of be the worst case for Nvidia. We can see the company recently reported $6.7 billion in revenue. This was up 3% a year ago, but down 19% sequentially. This is supposed to be a huge growth stock, but this is a company that barely grew this quarter. Not only that, the company's expected guidance for the next quarter is pretty horrible in my opinion. Revenue is expected to be roughly $5.9 billion. If we take a closer look at last year, it was about 7.1 for that quarter, so it's going to be down a nice amount year over year. It's also going to be down a nice amount sequentially as well. And this is where I feel like the first bearish point comes in. For all that to happen, a bad earnings, bad guidance, and the stock price to be up right now, it tells me that the market was already expecting this strong negativity. So I do believe many investors might believe that the next quarter might be the bottom for Nvidia. So they're kind of seeing into the future where, hey, quarter 3 is going to be bad again, but quarter 4 is where the strong growth is going to come in. So I want to say that expectations alone is one of the biggest bearish points, because when they do report in quarter 3, if guidance for quarter 4 is also weak, I think that's going to be a very, very bad scenario for Nvidia. So my first bearish point is pretty much just expectation from the market. The second reason to be bearish for Nvidia right now is a slowdown in the data center market. We can see this quarter was about 3.8 billion. It was up about 1% quarter over quarter and about 61% year over year. So there is still some strong growth. But the company did give a bit of warning during their earnings call. First, they mentioned that they are seeing a lower offset sales in the Chinese region at the moment. At the moment, that's being offset by the strong growth in North America still. They do believe that the Chinese market will eventually pick up, and I do believe this is where another kind of risk can come along. What if the Chinese market doesn't come back in as fast as they anticipated? And the second risk here is, what if the United States market, even though right now is still seeing strong demand, what if that starts to slow down? Then you're going to see a slowdown in both the gaming market and in the data center market, and that is a huge risk. Another thing that they mentioned is they are being impacted by supply chains. They mentioned that sometimes there is a slowdown in data center sales because not all the components are available to them. For example, here, Nvidia's HGX supercomputer comes with about 8 GPUs. It also comes with numerous network cards and also 2 CPUs. The CPUs Nvidia has chosen for this HGX platform is Intel Sapphire Rapids, and we all know that's being delayed. So while Nvidia itself might not have too much supply chain constraints, even though they are mentioning some in the networking side, what if their kind of partners and kind of these other supplies needed for data centers continue to see supply and component delays? It can definitely affect a slowdown and create a slowdown here in the data center market. So the cloud market has 3 risks in my opinion. First is Chinese market not picking up as fast as they anticipated. Second, the United States market actually slowing down, even though they're still seeing strong demand right now. And thirdly, the overall components and supply chain issues continue to come up because of delay from products like Intel and just the overall kind of supply constraints that maybe some other components are seeing. Also, if you're enjoying the video so far, make sure to hit the thumbs up as it does help me grow my overall audience. And if you want to support a little bit more, make sure to subscribe using my link at fool.com/Jose. Like I mentioned, even though I am bullish in this company and I'm super bullish, this is my #1 holding over, I want to say roughly 15% of my total portfolio. Luckily for me, I do have a very kind of low cost basis per share, price point, but at the same time, I still need to understand all the risk affecting it. Even all these risks that I am mentioning right now are true, and I can definitely see them. I'm still super bullish in the long term of things, but I believe that in the short term of things, things can continue to be very, very volatile. Now, the third reason to be bearish on this company right now is their gaming side. We can see there has been a huge decline here, with about $2 billion this most recent quarter, compared to last quarter was being 3.6, and a year ago was about $3 billion. This is down 33% from a year ago and 44% sequentially. There are numerous reasons for the gaming market slowing down. First is just cryptocurrency mining, right? That is a huge headwind for the company at the moment. The second is consumer spending decreasing. Consumers right now might be a little bit more hesitant of buying a new graphics card, or buying a new laptop, or buying a new desktop. And finally is the next generation of graphics cards are coming up in the next few quarters. So some people might be waiting off for the next generation to be released before purchasing graphics cards. So right now there's numerous headwinds hitting the gaming market. So if we see a quarter ago, gaming hit its peak at $3.6 billion. And I do believe even with the holiday season, even with the new kind of products, the crypto mining was definitely a nice tailwind for this market. And for that reason, even with new products, I don't believe we're gonna get to all-time highs in the gaming segment anytime soon. And for quarter three, taking a closer look at their guidance, this is actually gonna expect another sequential decline, and it is gonna be down a nice amount year over year. So those are three reasons to be bearish on Nvidia. Like I mentioned, I am a long-term investor. I have no intentions of selling, and this episode was more just to kind of remind investors that even though one can be bullish in the company, it's always important to understand what are some of the risks. So I hope you guys enjoy, take care, have a good day, and see you next time.